Hey Michael, Eric Mwather here. Just wanted to do a quick video as a follow-up to a conversation a couple of minutes ago. So we are looking at the market here. Let me bring the market. All right, so here's the market with about half an hour to go before the close. And the Dow is up 260. Just want to show you what I am looking at here on the daily as a starting point for our next, or at least where we can start with the educational material here. And I just want to show you some of the things that I'm looking at, and then you can probably give me some type of feedback, and that can help me gauge where I need to start. So you take a look at the Dow daily. Couple things. Now, if you've been watching my videos, I'm sure you have. This is where the market has been bouncing without fail. Anytime it's below this line, it's been with uniform action. So I would say this is uniform action below that level and back above it. You know, and even this one here is not the best, but I'll take it as uniform action. And this seems like a uniform action, in my opinion, or by my experience. So it's something like this, like a W. Uniform action. Otherwise, you can split it in half, and it's uniform action. This side is equal in space to this side. So that's why I'm saying this. If you split that in half, it's really balanced. That's uniform activity. Uniform activity is just a sign of the market being either manipulated or some balance is coming into the market within balance between bulls and bears. Let's just say that. But what I wanted to talk about is this double bottom. Now this is actionable. Why is it actionable? Because if this market is truly going to hold, so we don't know what the market is going to do tomorrow, a week from now, a month from now. We don't know that. And so we cannot act on things we haven't seen. But we can say as of right now, I can go long this market. I might not have to get the market correct. Excuse me. All right, I apologize for that. But you can see here that if you want to simplify markets, sometimes you just have to keep it as simple as possible. Now, if you want to make it a little bit more complex, you can go and find reasons to continue being bullish as of right now. You can see this, the red line here is the 200-day moving average. Now, it's just a line people use to gauge visually where the market is. I'm sure you are aware of that now. Support at the 200-day, support at the 200-day, support at the 200-day, came close, market wants to hold. So without knowing the future, you can use this to go long stocks with a stop. And I think that's keeping it simple. Now, if you want to complicate this, you can go, for example, take a look at the 30-minute chart. This is for the NASDAQ. The problem is this is the high. We are off the highs. We know that for a fact. In fact, much lower. So we know that the high. Let me take that off. If that is the high, the market pull back, we just go and find where the break took place on the RSI. And you can look at the RSI as a measure of sentiment. So the sentiment broke down here, which was good enough to bring the market lower. Good enough? Got it. So now draw a straight line from the break point. And you can see that if we use this evidence here, if you wanted to be a little bit cautious, now I'm complicating things, then this is where you would not want to go long any stock, because stocks follow the market. 75% of a stock's move is based on market. So if 75% is based on market, it shows that if somewhere here we coil back over the next couple of trading hours, maybe into tomorrow, then this is where you want to wait for the market to give you another signal to go long. Make sense? In other words, somewhere here, maybe the market pulls back, most stocks pull back. If you buy a stock here, chances are it's going to pull back. So what I'm saying is, if you want to complicate things, you can also see that there's some type of a line resistance connecting the highs. So this line connects, goes through this high, this high, this high, this high, and where it's trading. So this is a reason for me to say no need to rush and buying stocks right now. Give it a couple of hours to see whether the stocks you're looking at or options on the long side can also be bought at lower prices. Otherwise, it's a good starting point for us. We'll see what happens in terms of whether you feel this is a good starting point. Let me know what you think, and let me complicate this a little bit further. Take a look at the VIX, the volatility instrument. For some reason, has been giving us sell signal for this instrument, buy signal for the market. You can see over the last couple of weeks or so, it's been finding resistance here on multiple occasions, and here over the last day and a half. So this tells me that this market wants to go down, or at least the VIX wants to go down, the general market wants to rally. So I'm going to leave you here with the US markets trading. Let me see that. Trading here with about half an hour to go, up to 25 on the Dow. I'm saying that we might get a pullback into the next couple of trading hours into the next session, which is tomorrow, Thursday, where you could buy stocks, the same stocks you wanted to buy at a much cheaper price. Otherwise, let's use this for a starting point, and you tell me where you want to go next, and I can fashion some type of educational course based on your specific needs. All right, talk to you later. Eric Moore, good luck, peace, and blessings. Woo!